I am not a financial advisor. These videos are all meant for educational purposes only. All Complete Trader Academy videos are my personal opinion and perspective. Trading carries a high level of risk, and all results are your own responsibility. Please always demo first. Hey everybody, welcome back to CT Review. Today is December 3rd, Tuesday, 2024. Hope you had a good day today. So we ended up speakering out here, which was pretty common. Watched yesterday's video. So we were talking about, kind of like 3 drives up and all that. But when you get here, you expect some type of speaker, right? This is kind of what I meant. But when we come up and we come back and all that, you can see that we do that here. So you got this hour imbalance on the 4-hour also, but we see we come back, we retrace, and we get into and we sweep that liquidity and we tab that. So then we come up and then we take out the high. Something I forgot yesterday to mention was this. I caught this sell, but I didn't talk about it, but I forgot to mention this. So when we were coming up here, let me see if I could squeeze here. So when we were coming up here like this, when we were coming up, you see how we were obviously, we're coming up to get this liquidity, get that high right there. See that little high right there? And then we get to the gap, and then we have that swing. And then that candle, which is the 2 p.m. candle, on this day, which is November 13th. So we tag in there, and then we take out that liquidity, and then we tag into the wick right here. There's 1300. So let me show you here. See if I can. Well, you can see that. It's pretty obvious. See how we tag in, we get that, and then so all the momentum traders, they're not leaving. They left that alone. It's pretty much this is how I was able to get in here, but that's the logic. Like, where are you going? Like, when we come up here, I forgot to mention this yesterday. But anyways, so that being said, when we come back here, now, obviously, you would love for it to just rush right for the previous week's high, obviously. But the thing is that that's a little too easy, right? So in the sense, so let me go to a smaller time frame so you can see it, but a lot of work here. I'm going to show you in super game though, but when you see on the 15-minute, you can see that liquidity we got right there, right? So it's a sell model in itself, right? And then it turns back into a buy model because of the origin of the price here. And then you see that we, on the 4-hour, let me show you here. So I was already in the sell from yesterday, and then price came down here. So when we came down, if I zoom, well, let me see if I can do this, show you real quick. So we're tapping here, and take a look. We make the high. We make if I drew it, it would be easier to see. But let's just do it this way. So that's like, okay, that's like now you hit your extreme, you hit your higher low, and then you see this pushes up. We get the gap. We push up. We're sitting in that gap. So this is not random. We're still in that gap. So how important to you is gaps? Obviously, very important. But when we get this, it's a lower high. Even though it's above that high and above that high, this is logical where they just show manipulation. So it's drive one and whatever, and then they come back down. So I'm looking for this, right? I'm looking to come back below. And in doing so, we're now inside that 4-hour imbalance up top here, up there. Okay. And then from here, we're trying to continue back up. But let me leave that alone for a second. So you see that? So you can see we're taking out that low. And you're saying, well, why isn't that a shift of structure and all this and that? Well, it's because we're still bullish. So we are bullish. So you got to remember that, right? So I got to hurry up because I got an appointment. But what's it called? That's why I'm all over the place. But as you see here, we get underneath the gap here. The midnight level, see, is in the background is orange. I need to change this color. But it's orange right there. And then we tap it right there. And look what time it is. Oh, 8:50. Beautiful. So then you get this imbalance right there. You get another one right there. We tap into this last up candle right here. It is 8:55 right there. We tag right into that. Order flow is going. Boom. Shooting down. And boom, we get down here. Now the 9:30 opens here. I have this projection from here to here. I'm using this swing here because they're all blue candles. So this is the last energetic move up before we break. Let me fix this. Okay. And it's hard to fit everything on this screen. And then as you see, I'm sure you can see this, right? So beautiful order flow there. And then as you see, we're underneath the opening gap as well. And then where your projections here, you get 3.5 to 4. Beautiful, right there. So now, when you're in this trade here, if you were selling, you get the 3 drives, 1, 2, 3, right? Here you get your signal here. You get a higher low first here, divergence, but all right, we're floating, so you get that raid, right? Because you want a raid. And then that's explaining now this is a beautiful signature where you see a second divergence here, and then that's generally the one that goes, right? But anyways, with that said, you're in a 3.5 to 4 for a prime reversal area. But what's also more important than all of this is that I know we're gonna come down and tag the bottom of this 4 hour. So we tag in the 4 hour, wait for them to tag in. They do that. And also, if you refine it to the 1 hour, you would have been fine as well, right? So, but on the 4, I was waiting specifically on the 4 hour because the 4 hour is definitely more reliable in this scenario. But what do we have? I'm looking at this as a speaker. If I want to try to make this video short, but as you see, when we come up here, it's like high, low, low. All right, so you see that? All right, and then we get the drives up, push up. Now we're in our third drive here, or many ways to say that, but and we get above that high, right? So now we're pushing up for, at the end of the fucking day, they love to do that. They're pushing up for a newer high. But that being said, that I'm already again. So when I'm making the video yesterday, I'm trying to explain that. I'm expecting that. You know how many times I've mentioned, when you get to a top here like that, you want to see it. You want to see it speaker out, right? So now that we're here, we get pushed up. We push up here, and you see we get this shift above this candle, this 930 candle. So we get a shift above it, and we come back in. We come back in where we come to the tail of the wick of this 931. Look how it comes right back to the low of 930's candle. See that right there? I'm gonna just hover my. See that? You see how they come? That's a prime signature. Beautiful buy right there. If you don't get that, then what do? Well, we get pushed up here. We get into this bearish imbalance. This 905. There's no wick on top. Hits the 50% literally on the head of the opening range gap. So this is just a raid below. So we're gonna get our pump, and then in this case it's buy, sell, buy, right? So it's higher high, higher low, higher high, pump, minor dump, and then resume the pump. And now we're pumping still, as you see. Well, I'll get to that in a second. So the minimum goal here when you're trading this right here is obviously this level for the 50% opening range gap, but we reject it. We come up to the head. We come back to the first imbalance, 934 in green, and as you can see, we end up using it later. Beautiful. So this is support. You get these down candles, and sure enough, I'm projecting the candle itself. So you can project the swing, and you can project also the candle. The last down candle, this demand candle, it is in itself going to be used as a projection. The high and the low of the 930 candle. Why? Because of the fact that this is technically also the last down move. So in this candle, they're referencing that. And if you come up, as you see, we come up to 3.5 beautifully to the right. Look at this right here. Look how we come up first. We get to the 2 and a 2.5 right here. And then we seal the complete opening range gap. I mean, beautiful. You have a lot of confluence in this area. You have the midnight level. You have the gap itself. You have this, what's more important here is the sealing of this opening range gap. Then what does it do? It rejects. You get a break here. You get the swing from, this got moved. Don't know why that's there. Okay. You get a reject. You get a sell off. So you get a break right here. So a sweep break comes back into this inversion, this 1005. See that? But you're bullish. Don't forget that you're bullish, but you're going to get retracements. So in that sense, obviously still looking for the buy. But if you were in early, then it might throw you off. But again, you're bullish. So that's being the case. We use as an inversion. We stop on the dime. We also have the opening day gap in the background holding it. And then we obviously just tag that midnight level, but then we shoot down, right? We come down, and if you do the swing from here to here, you can see the 1 to 1.5. It does come to the 1 and 1.5. Plus, we get 3 drives here. 1, 2, 3. Boom. Oh, how convenient when we came back to this first imbalance. We reject here. We come right back. We're just squeezing out the sellers. All this yellow pricing is just balancing price. Got right back to the top 25% of the opening range gap. By the way, that's another thing I'm forgetting to mention. The opening range gap, that line right there, you can see that, right? Top 25%. We hit that as well, and back to that inversion. They coupled with each other, reject beautifully, and then after they built liquidity, who do you think they're coming to attack here? They're coming to attack that low right there. So they're coming nicely below it. As you see, you're already in an oversold area. Does it buy from these areas? Yeah, it does. Would you have liked it to seen it hit there? Yeah, but at the same time, this is just the logic. Look at these motherfuckers. I want to do it now. So I mean, if that doesn't tell you that's, anyways. But so. Also, again, these down candles, and we're in a rejection of 1 to 1.5 for a retracement. But again, you're bullish. So even if I was to just grab like a regular fib, right, like a regular fib. Let me see if I could do this without making this dirty. You'll see right away that now you're getting you got real close to that 70 level here. You miss it, obviously. But you're in the vicinity. But this is just I'm just giving logic right there, right? So when you're getting this leg up, technically that's the leg there up to here. So when we push up, we not really opportunities to get it unless you understood that this bearish imbalance here, this 1052, I'll draw it out real quick. I didn't draw it because I didn't want it on there, but I obviously know that's there. Let me just do that so you can see that. But what happened here, again, we had the 3 drives, right? We had the three drive. 1, 2, 3. Okay, pushed off. You have that first that 1052. So you get the macro in there, and you get to see that the price stays in there. That's an entry there in itself. This third drive, taking that out, is also, well, plus that low. That's also a nice entry. Why? Because again, when we pushed up, and to get up here, that was easy. I mean, to be honest with you, that was fucking pretty easy. So there, not a coincidence that we come back there. So then what we do, we push up. Then I'm showing this one. The reason why I'm showing this imbalance, which is going to be this 1051, is because when we push up with this 1056 candle, we literally close right at it. And then if you look at the 1057, which is right there, you can see that there's not even a body there, but you can see that it literally opens right on top and just pushes off. So, but guess what? We push off. Now this leg. We're making a leg up. So let's do the projection. Do the projection. You get the 2 to 2.5 right here. You can't miss that. But remember, we're also in this projection here, which we now just went above it. And that was just using this candle, by the way. So I can move it to the swing, but I'll do that in a second. But here, look at the 3.5 level right here. Look to the right. You see how this level literally gets to 3.5 right there on the head? Beautiful. So then what does that do? So we're in a retracement area. So possible reversal, but we're bullish, so we're not looking at it like that. But and you can see the retracement back. Okay, so when it's up here, we just took liquidity to the left. Now we just took the previous day's high. In this case, which would be obviously Monday. But talking way too much. I got a truck coming here. All types of furniture bought and stupid shit. But so the price, once we're up here, okay, cool. We're overbought here. Look at that. Nice. Retraces. Where is it going? Well, obviously, you want to wipe out all these people who were buying. do a projection here. I did it from here to here. Technically, it could be from right here. Let's just do it like that. But you can also do it from the swing here. But in general, look where it comes to 2 to 2.5. Oh wow! But even if I didn't have this, okay, I'm gonna delete this because now it's this is just way too much overkill. But well, you know what? Let me just leave it. So how you doing right here? Look, first of all, you got the 50% level of the opening range gap. Then you have that nice breakout candle, this 1058. See that? Pushed right through that swing high. Oh, look to the right. Oh, you don't say. Right? So this is logical. Look at these motherfuckers now. They want to do it now. Huh. I knew it. But you get the drives again. Boom. Third drive down, sweeps, all that, gets into here, gets into there. That's what's really important right here. All right. They didn't need to come any lower. Because when the price action's here, you don't know if it's bullish yet. But when you get a shift above the swing high like that, look at that. Oh, what a coincidence, right? So very logical. Okay. And then boom, now we're headed up here, obviously. And then let me open this up. Same story here. So we get this inversion. Price is just pretty much opening up. Close. We swing right above that right here. We bust through. And now we're above the opening gap with the 25%. We push up here, and then we retrace back. It's just a high and a higher low forming in this leg. And then what does it come to? Comes right to the 25% level. You can see that line right in the background, plus coupled with the gap. It's at 50%. Look at the bodies. I'm not even going to draw that. But where does it come back to? Oh, you don't say. It comes right back to that breakout level right there. You see that? So this is their minimum way of maintaining, the flow, right, of money. So sure enough, we get to this gap here. We push up. Oh, you don't say. Look where we ended up. So that's this swing here, 3 to 3.5. Wow, they did that while we were speaking live. Oh, dead center, nice. So, and then technically, let me just see what it would look like here. But there's two ways that you can do projections. Obviously, well, that's actually more than that. But let's just say I did this, and then you can see us coming into this 2 to 2.5. You pick your poison, right? And then I need to move forward here. Let me see. Let me just do that. And then that being said here, we had a okay. So we pushed down here, and 930 was here. There is a little divergence on the 1 minute, but I'm not even going to go there. You can see we had a little shift right here, higher low with S&P at the time. That pushed us up here, but not that really serious. As you see Dow, so this is the reason why I didn't like trading Dow anymore. As one example, wow, look at that. Is because the consistent amount of fucking drives that they would bring down when you're trying to buy, and it's like, bro, I give up, bro. Like, I give up. Now this is a lot more nicer. Obviously, this is what we would love to see. Obviously, S&P had many more drives, but then we had a higher low here, right? Higher low with Nas, and we had lower lows here with Dow and S&P. That's continuing that buy. That's that sweep right there, pushed up for that leg, and then you could definitely see the same thing here. You can definitely see the same thing here, where it's a lower low here, and then we swept there and we pushed back up, right? And here you can see just higher lows right there, right? But and then when we got up here, the price here, once we took out that high, we retraced back. We had a nice divergence at that time for a higher low, higher high, I'm sorry, with Nas. So pushed us back down to here, right? And then when we came back up here, we made another high. It's just another higher high. We had a divergence again. So it was beautiful. So nice higher high, higher low. If I deleted all that, it's really just a higher high and a higher low. But beautiful for Nas. The rest is looking dirty. Looked a little dirty there. But and then dollar you know, just kind of, I think the market's a little tired at this point, right? But I could see lower pricing for dollar, so that can get us that push that we need at the end, and finally get to. Let's go into Dow here. As you can see, they just pulled back a little bit more, got into more of this buying liquidity. Salesforce. This is. Hold on a second. Anyways, so yeah, we run overbought a little bit, so we're coming down. Now we're at that 50% with Dow. So I still feel like this gap is just super suspect for them, but at the same time, we're really bullish right now. But we should be getting that big retracement if you watched yesterday's video. So again, I'm still expecting this. So now we're fanning out here, and then I expect this to. Now we're here, for example, right? We came up here, we retraced to that imbalance, and then we pushed back up, and now we're like sitting somewhere here. So I'm expecting this type of thing, and then the second. Let me take a look here. Like these first 10 days, I could see. So first 8 days, we're up here, right? Type of thing, and then maybe even sooner than that, and then we start heading our way down as a retracement. So I'd like to say somewhere in the 9th day, 8th day, 9th day, and then we start retracing back to then be in like the next set of 10 days. So that would be like the 12th or something like that. And then we kind of resume for that Santa rally, and that be it. So nothing has changed there. Everything is still the same. Look at that shit. Yep, now we're in there. So, did I go over S&P? So, as you see, again, not exciting, very tough to act. But again, you're looking for simple buys, right? So we are bumping here, but we still have I think we still have some room to speak out. And I was mentioning yesterday that I wanted to see something like this, right? Like in this case. So this is kind of like what I was talking about. So how you make the high here, you make the low. And you come in, you get into an imbalance right there, and then you make the new high. So if you draw that out, you can see the speaker there. And that's, take a look. It's very similar here. So now we're getting pushed up. So where are we in that scenario? We're kind of like doing this right now. So this price action right here is very similar to where we are here. And then, a little 3 drive top there, and then, same shit. So, yeah. And, yeah, I mean, hey, something you can talk about. It's just bullets, bro. So don't try to fight it. And, NVIDIA. So again, I was mentioning, what are we going to do here? Well, they rejected plenty of times here. But now, with this candle that they just closed and made, this shows some strength here. So you'd want to see the price action stay inside this candle. So if you drew a line like that, like this, you want to see the price kind of stay there and make its way up if we're going to continue being bullish here. So 23 minutes, I like that. I know I'm missing something. Did I miss it? Did I miss something here? I can't mention everything, but look how we came back to that same first imbalance. That's coupled with this. Whoops. It's coupled with this 906. So take a look at that too. Why does it do that? Keep grabbing the wrong one, dude. As you see that, right? So you can see in the background, we're there, and then boom. Look at this 1056 bounce off that middle. But I don't think there's anything else I can explain here. So again, and then one last thing is also like when you had this range of this speaker, take a look here. Let's draw a quad here. Let's make this a quad. Come on. So as you can see here, that's that speaker, right? Where did my mouse go? Jesus. Okay. So high and low, right? See that range right there? So when we're climbing up, again, we're climbing up, right? Look at them going now. Look at these fucking bastards. I swear. It's comical. As you see here, when we push back up, right? Where would I expect the price to come retrace back to? Back to the mean of this speaker, right? You could do it. You could even do it from here too, to be honest. But let's just do it like this. You see, that's just basically what I'm saying. But when we're here, we popped up, we retrace back. Where's the 50% level? Right there. Okay, see that? You see it on the chart here, 50% level right there. And if you were to measure, then once you made that new high, now you're in this range. All right, so I just dragged that to there. So now you can see it very clearly here. Right, see this high and this low. See the quad levels here? Right, and then look where the price is coming down to, 50% there. We also had that no wick on that candle there. You had that little breakout level there, and I've already explained all that. But that is what's the business, buddy. Because when this made this new high, coming back to the reversion is very logical, and that trade from this sell to this is very nice. And then as you can see, we're climbing up. If I go back to this range from here to here, you can see that we come up, all that price action to the bottom. Look at the bottom 25%. Look to the right. Oh, coincidence. See how this area also conflicts with this 25% level? You see that? I'm going to move it over so you can see it. See that, right? So look at that. Beautiful. Taps in. Here's 50% of that range from that high to that low. And then we push up to the 75%. We retrace back to the 25%. Then we come up. And then we come back to then the 25%. That's your discount price right there. See that? I'm talking way too much and doing too much. But hopefully that helps. And super fire though. And let's see, what else do I gotta say? I think that's pretty much it. But now they just reached up and, trying to come for this high. Now they've took out that. Now they took out that high. This candle here, this 8 o'clock from November 11th, right? We just, you see how they rushed for that? They just took that out. That was the same principle I was mentioning here with this price action right there, with this candle here. Same thing happened there, right? So now do they fuck around and, retrace back? I'm expecting the three drives, but this is kind of, this might be it even. Who knows if they try to dangle that carrot? Who knows? But we're in an overbought area here. Again, I still expect them to kind of go above though. But look at the 4 hour super overbought now. So when we were here, we were underneath the overbought. So not really reliable there. You see that? Right? But now, where are we? Now we're up here. So I'm trying to see this whole process all over again. What do we get? 1 hump, 2 humps, 3 humps. Kind of like that, right? And we're getting there, right? So we're getting there. So I would say, between the 5th and the 10th is where it's going to probably reverse. I'm just talking logical with looking at the historical data, but that's nice. And yeah, man. So you guys take care and God bless.